Wednesday, April 21st, 2021, Maneco 64, home of alternative economics and contrarian views. So we're going to look at gold and silver today. The technical picture is starting to look good. It looks like the continuous physical demand, especially for silver and also for gold, I think. And it looks like it's starting to have an effect on the paper price. We're going to quickly look at an article from King World News where they look at the Bullion Bank's exposure, short exposure. It looks like they've been covering their shorts, paper shorts in the futures for the last few months, and hence the reason why they've manipulated the price lower, because they were sitting on big losses, because they've been going short since last year, months ago, when the price also was going up. So they had to increase their shorts to try to control the price from going higher. But the problem with that is that they sit on bigger and bigger losses. And that's why we've seen this correction, this grinding lower correction. It hasn't been a collapse of gold because the bullion banks use these dips. They trigger the sales because they know where the levels are in the paper market. Then they cover their shorts. And before I look into the precious metals, just wanted to talk a little bit about some of the news that's been out here in England or in the UK about football. We call it football, you call it soccer in the States, but really it is football. It's the original football. And the top 6 clubs here in the Premier League, they announced a few days ago, I think it was Sunday night, that they're going to break away with some other clubs from Europe and form a super league. And there was outrage from the fans, from even government. Government, you can see what government cares about: bread and circus, right? There's no outrage about the silver manipulation. The public doesn't go mad or protest about that, but they protest about some football teams breaking away from a league. What's my view on this? Well, I like football. I used to follow when I was a young boy. In Brazil, football was big, even though I wasn't a very good player. The teams were great in Brazil. I followed football here a bit, but in the last 20 years, I would say, it's gotten so out of hand. And what do I mean by that? Well, all the money flowing into football, it's become more than just a game. It's like a business. And in the last few years, well, or decade or more, we've seen all these big private equity guys from the States, from the Middle East, very wealthy individuals come in and buy the big teams. We've seen players been bought from all over the world to play in the Premier League here in the UK or in England. And they're paid millions and millions of pounds a week sometimes. The teams are up to here in debt. That's the model of private equity or hedge funds. And the fans love it. They've loved it. They've loved all the great players. It's become the best league in the world, arguably. And now what I think has happened is they're running out of money. They've got too much debt. So they saw this as a way of monetizing their brand by going global. And there's been a backlash here. And it's surprising that the bank that's been behind this breakaway is none other than the bank that's been manipulating silver the most. It's JP Morgan. It seems to be behind every nefarious activity. And I think this football situation here in the UK or in England for the Premier League is just a symptom of all the easy money that's around that allows football players to earn so much, and nurses and maybe other important professions to be hard up But unfortunately, the public, not the public, but the supporters, they've only got themselves to blame because, you know, they that's what they wanted. They wanted the top players. They wanted the teams winning big in the European competitions. But it looks like they've stood up now. They've said enough, which is a good thing. So the news this morning is Super League crumbles as all 6 English clubs pull out. Teams abandon breakaway European football competition after popular backlash and sanctions threat. I don't think it's right. Government, the prime minister here said he was going to intervene. I think that's wrong as well. But be as it may, it looks like they've backed down. It's too bad that the general public sees entertainment or football as something so important. Not saying that it isn't nice to watch a football game or like I do to watch a golf tournament, but and I think golf as well. There's too much money in it. There's a problem there too, but that's a subject for another time. So let's look at the markets this morning, and we'll go and look at some charts of gold and silver. And even oil as well. Crude oil, I think, is starting to look good, and the CRB. And I'll show you this Bullion Bank short exposure as well. So right now it's 8:15 a.m. London time. We've got spot gold at 1788. We're right near the highs. It's up just under $10. So gold and silver, gold in particular, did well yesterday, despite the fact that the stock markets had the indices in the stock market had a tough time. I saw some of the headlines there. They're bringing up this pandemic again, saying that things are getting worse in India and things like that. Maybe just an excuse for a cover for the fact that the market is too overvalued, right? Silver is up 1% this morning, back above 26 at 26.11, up 27 cents. So silver is outperforming gold this morning. So let's have a look at a chart of gold. I was talking about a key support from, let's see, end of November last year. Gold bottomed at around 1766 or 65. And after that, it went all the way up, and it actually went up to almost 1960. Gold almost up to 2000. The close for the year 2020 was around 1900. But since the beginning of the year, we've been going lower in gold. It's been frustrating, of course. And back in, let's see when that was, end of February, gold tested that end of November low at 1766, and it broke through there, and that's what took gold down to 1675 or thereabouts back in the beginning of March. A huge sale happened there. You see the bullion banks. Traders know those key levels, and they knew that if gold went below 1765, it would dump, and it did. And then it tried to recover in March, and then came back down to retest that level, the beginning of March low at 1675, and we made a double bottom. And I would say over the last couple of weeks, we've been able to break the midpoint of that double bottom, which was around 1755. So it looks quite good in the short to medium term gold. Longer term picture, of course, I'm very bullish because I'm very bearish the fiat currencies. But I noticed the last couple of days we retested that level because that level from end of November at 1765, 66. As I said, the last couple of days, that was going to be a key support. And it has been, because on Monday, we traded down to 1766. Yesterday, we went through that level, and it could have triggered a lot more sales. We could have seen gold maybe go back to 1750, but it didn't. The low yesterday was around 1763. And the fact that we're back up this morning, almost around 1790, and the fact that the stock market had a really bad time yesterday is very encouraging, because we've seen recently, it doesn't matter what the stock market does, up or down, gold always goes down. Even though the stock market had a tough time, gold went up. Silver was pretty much unchanged, didn't do as well, but it was a relatively good performance compared to past action. So the stock market, what happened yesterday? Well, the Dow was down 0.75%, which isn't that much, but in nominal terms, it sounds a lot, 256 points. S&P was down 0.2%. NASDAQ Composite was down just under 1%, and the Russell 2000 was down actually 2%. So the two indices here, NASDAQ, which has been leading, dropped more than the Dow and the S&P, and the small caps have been doing really well as well of recent months, and they dropped 2%. So it looks like they might be leading on the way down. Just wanted to show you as well crude oil, which is, I do cover where crude oil is usually, but the technical picture, I don't so much. But you can see this trend line here. It's hugging this trend line. This is a weekly chart. In the last few months, we've been having a tough time breaking through this trend line. We've gone below it. It looks like we're going back up above it. And if I zoom out and show you where this trend line comes from, you can see why it is important. It's a huge kind of falling wedge since the high in 2008, which was around $150. So that's why it's so important. It looks to me that crude oil could be pausing here in the last few months before it moves higher. It looks like a continuation pattern. It looks like a flag of some sorts. So that's pointing to more and more weakness in the dollar. Why weakness in the dollar? Well, because when commodity prices go up, that means the dollar is going down. Because as I've said many times, commodities are priced in US dollars. So the less you can buy with a dollar of commodities, that means the dollar becomes worth less. And the CRB Index as well, which is heavily weighted by energy as well, that looks fairly similar to the chart of oil. As you can see, this is going back to '08 as well. We've been pausing again here for the last few months, and it looks like it's trying to pick up again. So we're going to keep a close eye on that. I'm not saying it's going to do it today or tomorrow. It could take another week or two. We need to be patient. But I think the strategy of holding hard assets, be it commodities like the general commodities or precious metals, physical gold and silver, is going to pay off, because our central bankers, they're going to continue to devalue, debase the currencies. They can't stop. They need to keep printing. You're seeing even football is in trouble because they've got too much debt. That's what they were trying to do with this new league. Everything is up to here in debt. Sports, government, businesses, hedge funds, investment banks, prime brokerages. We saw Credit Suisse lose billions because of a hedge fund blowing up, Archegos. We saw recently that even Morgan Stanley was involved, and they lost almost $1 billion. So it's all very fragile. I think the central bankers are going to keep inflating. It's inflate or die. And they can't have the stock market either correcting too much. I think Bernanke wrote a paper or said something a few years ago to the effect that they like to see the stock market elevated because it increases the wealth effect. I guess for the top 1% or maybe the top 10%, but the general public still hard up. And how are they going to solve that? prices there. Well, they're going to keep inflating through stimulus. It's basically de facto universal basic income. They're going to have to keep doing that. And also infrastructure stimulus. Someone noted that the package they're proposing for infrastructure, there's actually very little money for building real infrastructure like roads and bridges. A lot of it is just social programs. So let's now look at the King World News article about the bullion bank's exposure to gold, to the gold futures contract. It's not real physical gold, but as you can see, they were heavily underwater with gold around 2000 or above 2000. They had a net exposure of over $40 billion, so they didn't want to see gold continue to go higher. That exposure's fallen a little bit here, and I'm not going to go through the whole article. I'll put a link to it in the description. But they've been able to close out a lot of their short positions, and they might still be doing that. And they might still try to knock gold down, but I think they're going to have a hard time. And that's why the move higher in gold could be very sharp, because they have still a substantially short position, and they might have to chase the market. The only way to close out a short is to put on a new long position, so you net them out. So there you go. That's what's going on. It's starting to look encouraging. Gold and silver, the paper price, of course. And we just need to be patient. This is a longer term game. You don't want to get rid of your gold and silver unless you have to. So when do you exchange your gold and silver for other assets? Well, when you think that gold and silver are overvalued relative to another asset that you desire, that would be in your interest to exchange for. Yes, you might have to go through the fiat currency to do that, but it doesn't mean that you leave your exposure, your wealth in the fiat currency. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.